Yeah, there we go. So it's recording now. So yeah, on EURUD, so we have the selling climax, which is the accumulation of sellers, right? Which is an oversold area. So once an area is oversold, retail perspective, they tend to start getting for buying positions because I mean they know that market's gonna go up, right? So they're gonna get in for their buying position. I mean retail traders should have got out here. The people who are good doing retail and the people who are not pretty good traders from retail trading, they're going to just leave it running because they just get greedy. Their emotions come in a lot, so they're like getting greedy in those trades. They just want to make more and more money, and they don't want to get out that trade. So they just leave their trade there running. And what's going to happen? They're going to be moving their stop losses that they got in for buying positions around this area where we have the selling climax. After the selling climax, it's going to create this AR, right? So the AR stands for automatic reaction. So it's an automatic reaction retracing around 50% of the imbalance that we have, which the imbalance is this right here. So that's the imbalance. The imbalance is an area that's just pure pressure of buyers or pure pressure of sellers, right? So when we have those being pressured out, like selling and just buying, these are pretty much the banks like getting them for sales to liquidate stop losses that we had prior and equal lows here.
Yo, did you freeze?
What was that? Did someone say something?
You froze for a second.
Oh, I froze?
Yeah.
Yeah.
Okay. Yeah, so where did I freeze at so I could?
After the imbalance.
Okay. Yeah, so after the imbalance, yeah, I was saying, so the imbalance happened because the banks pretty much getting for sales to liquidate the stop losses that we had prior over here from the equal lows, right? So once those equal lows are going to be liquidated, the market's just going to start pushing down to just clear out those stop losses, and it's going to create an oversold area. So what's going to happen after is that imbalances react like gaps. So you guys know, like when Sunday market opens with gaps, and those gaps always tend to be fulfilled at least 50% or all of it most of the time. Same thing with imbalances. It's like gaps. So it reacts like gaps. So what is going to market do? It's just going to react for a small retracement to the upside. In this case, it was on the daily time frame that happened, that we had this retracement going up. Fulfilled 50% of the imbalance, and market starting coming down. So started coming down, that's the AR, the automatic reaction. After the AR, we're going to be having what is the second tap. So the second tap, we have it right here. So second tap is where more retails are starting to get in for buying position once again. Why? Because they see a market going up. It starts marking their trend line here. So they start seeing an uptrending market, right? So they start seeing that uptrending market, second tap. They get in for buys here once again. They get this push up, so they get some profits going on. So here's where we have the sign of weakness. So the sign of weakness is an area where it starts doing distribution as well. Just consolidating, not much going on. We call it a dead market. So there's not really anything going on, right? So it's a dead market, nothing going on. So that we have sign of weakness. So sign of weakness is always going to be around the same level of the AR, or it could also be below the AR. If it's above the AR, it's not considered anymore a sign of weakness. It's just going to keep on going up, right? So then we have the sign of weakness, slow movement. Then after that, we have the downtrend. So we have the downtrend coming down, which the downtrend would be all this move down, which is where the banks start getting in for sales to liquidate where the stop losses of people who got in for buys here and got in for buys over here, right? So what happens, market comes down, boom, clears out stop loss and second tabs, does a small push up, but they come back down again to do what? To fully clear out the stop losses that we have left down here. We had stop losses left down here, or we have the oversold area. So once that happens, what's going to be next? The spring, right? So the spring is going to start rising to the upside, which is the big push up, where the banks start getting for buys because they already cleared out what it is, all the retail traders. So right here we have the spring, which the spring you can see it more clear on a lower time frame. So it's barely starting on a daily time frame, but on the 4 hour and 1 hour, the spring already happened. So what's going on in the lower time frames is that market's going to come back down to retest on the accumulation of price candle that we had left over in that spring. So we break it down to the 4 hour. Let me just fix this. Let me zoom out. So in the 4 hour time frame, right here we could see how market came down to clear out the equal lows that we had down here, which is the daily selling climax. Right, so we have the equal lows right here. clear out those equal lows, and market starts springing to the upside. Coming back to the 1 hour. On the 1 hour here, I mean, we already see the rally going up, which is the spring. So what's currently happening right now in the 1 hour? 1 hour time frame is creating a distribution, right? So every time that we have distribution, there's going to be impulse, distribution, retracement. That's how market moves. It's really like just legit how market moves like every single time. It's going to be confirmed by impulses, distribution, retracement. Once again, could be retracement, distribution, impulse, and so on, right? So we have the impulse, we have distribution. So what's going to be next? Retracement. So what the retracement is going to do what? It's going to come back down to do what? Come and tap on the accumulation of price candle that we had from the spring, which is the last bearish candle before the move up. So right here is where we'll be looking for buying positions on Euro AUD to start getting in for buying positions. So we are most likely going to be placing what it is a buy limit order. Most likely at 12 once London session opens. It's going to come down here to test it and just get immediately rejected to keep on rising to the upside, which our TP should be around this area, right where we have the main threshold of the accumulation price candle up here, which is we had the last bullish candle before the big rally down. So that'll be our take profit up there. So our stop loss would be around below this area, but we're just going to be placing the buy limit on your UD. So getting for buy limits, we're going to be longing it. Actually, wait, let me just break it down to the 15-minute. Just break down this accumulation of price on the 15 minutes. So we're going to want to mark the accumulation of price candle on the opening of the candle and 50% of the candle, which is right there, right? So let's break it down to 15 minutes. Let's see if we find a more accurate entry. Yeah, so we're going to be using the 15-minute one. Let's go to the 1 hour one, 50%. Go to the 1 hour. Let's mark our fib. Start an impulse, end of the impulse, which would be on the 7-9 fib level. The area that would be looking to get in, which is around 50% of my accumulation of price candle. Let me just adjust that right here. Boom, there we have it. That is going to be our entry point. Our stop loss, we're going to be having it 10 to 15 pips below accumulation. So it's going to be around 10 to 15, maybe like 14 pips. Oh, it's the 14 pip one, and I see the 10 pips. Okay. Okay. So put our long position tool. So our stop is going to be around 29 pips to have an overall profit of, well, first take profit is going to be right here, 86 pips, just to clear out this highs after. So that'll be, we'll be putting a twin trade, so we could do 2 placements. So this would be the first TP and stop loss for Euro AUD, getting in for a buy limit. This is going to be our entry price. This right here. Let me see if there's, okay. So that's going to be our profit area for the first take profit. And that's going to be our stop loss, 29 pips to gain, well, 89 pips for the first take profit. Let me know once you guys have that.
All right, pretty good.
Yeah.
Hold on.
And here I got it.
Hold on.
Yeah.
Hold on a second.
Hold on.
All right.
Come on. Get it. All right.
Already got that?
See.
Yeah, got it.
Right. So I'll give you the second take profit right now. So second take profit is going to be up here at 154 pips, which is that one right there. I got it.
Yeah. Yeah.
Okay. Any questions on Euro AUD?
I just have a question pertaining to something of your analysis. Like I know you take trades based on distribution, accumulation, or point of the rallies. I'm not sure what you call it. But what about reaccumulation or redistribution? Do you take trades off of those kind of setups?
No, I don't really do those setups. I only go based off of this, what we always go over with.
Okay.
All right. Quick question.
Mhm.
I saw that you drew your fibs from the. Well, I might not get the terms all right because I've still learning this stuff. I see you drew your fibs from the bottom, right at the bottom of the spring part, right?
Mhm.
Uh, and you are looking at the 50% of the accumulation or the open of the last bearish candle. So I can see you're not pulling it from the wick at the bottom. So I'm thinking about a trade that we took, I think like 2 weeks ago, CAT CHF, that kept coming back into that area and stopping us out. Like I was in that trade like 5 times. I was stopped out before we finally had that impulse move.
In the
So,
turtle soup.
Yeah,
excuse me?
so pretty much when it don't respect the accumulation at price, what market's gonna tend to do is to clear out that low. So it's gonna clear out that low because they might be stop loss around that area. So market's gonna clear out that low. So let's say for example, right? Let's say we get in for that buy activates, we hit stop loss on this trade.
Yeah.
So the reason why it's gonna hit stop loss is because it's going to want to clear out the liquidity that we have right here, right? The liquidity that we have around this area, or maybe the
Okay.
equals that we have in this area, to then start making this impulse to the upside once again. So that's what usually tends to happen. So like, let's say if it hits your stop loss, no worries. There's going to be another opportunity. Once you see that clears out those lows, this old low, you're going to want to get in again, which is
Okay.
which that would be the second entry after you hit stop loss. Now, if it hits the
All right.
stop loss again, well, don't even get in no more. It might not even go your way anymore.
All right. So another question
Mm-hmm.
is oh, I just drew a blank right there. Go ahead. Maybe before we're done, it will come back.
When what?
I said I was going to ask another question, but I drew a blank. I think I can't remember what I was about to ask. So maybe before the session runs out, it will come back.
Oh,
And
okay. Yeah. If you remember, just let me know. But okay.
right.
So any other questions on your UD?
Okay, I got it. I got it now. Now, when you have two take profit levels or three, does that mean you twin trade or you take 3 entries? Maybe you have three profit levels. Do you take 3 entries? When you have 2 profit levels, do you twin trade?
Yeah. So there's different ways that you could do it. So the first one is like twin trading, like you said, like taking multiple trades. But obviously, you don't want to put the same lot size on every single trade because now you're going to be over leveraging, right? Or one thing that you could do is just take one trade with a big lot size. That big lot size is like those 3 combined in a way, and just
All
once you go
right.
to your first TP, close
Okay.
close half
Close
of
down
that.
the lots. All
Yeah,
right.
just close half of the trade. Then once it goes to your second TP, close your trade like completely. And you have 3
Okay.
TPs. Well, close a quarter of a trade on the first one. Once it hits that area, second one then close half, and then the third one will close the rest. Right. So
What if that happened during your sleep?
well, it happens. Well, I mean, yeah, you just leave it running, I guess. But yeah, if I go to sleep, like sometimes I just move it to break even or anything. So
All right.
you could also put alerts. I think there's this app too that you could
Call
download.
All right.
It's called call levels.
Yeah, call levels. Yeah, you download that one on the App Store, and it just it could it's like you could set like an alarm. And like when it hits that area, like it's like an alarm that so it can
Oh.
wake you
Oh,
up.
nice. Nice.
So,
Do you,
like the example. Okay, like the example I gave the first time. Once, if you on your entry, if you put your limit order and price comes to clear out liquidity in that area, do you when you are entering again, do you still go in with the same risk as a first time, as it's now it's a personal thing for you. I just want to know how you do it. Do you go with the same risk after being stopped out the first time? Like say you have like 2-3 profit levels.
Mm-hmm. Yeah, so when it comes to like risk, like I've mentioned before, like don't risk more than what you're not willing to lose. Like for example, like in a day, like all trades combined, you should only be risking 1 to 5% max when like in a day, right? Like if your account 1%, 1 to 5% max. If all your trades combined already are 5%, if let's say if they were all to hit stop loss, that's why you have to calculate your stop loss, not just in case. Hitting all stop loss combined at 5%, just leave those trades. Don't take no more trades for that day until the next day.
Okay, so if I understand you, it means if you have the 1 to 5%, is it cumulative of all the trades you are taking that day, or just on that particular pair?
No, on all the trades. So let's say you have 3 trades, right? All those 3 trades are already 5% combined if they were all to hit stop loss. So if the first trade hits stop loss, don't take another trade. Why? Because you still have those other 2 trades. If they hit stop loss, it'll be already 5% of your account, right? So like don't even try to re-enter again because you'll be not respecting your rules.
Okay.
So you always gotta.
So do you look for divergence before you enter a trade?
No, I don't really look for divergence. Like at all. I don't use like indicator. Wait, divergence an indicator? Yeah, right.
Yeah.
Yeah.
I don't use indicators.
Oh, sorry, it's not an indicator. It's like fluctuations between the indicator and the price action. So like the confirmation. I know your brother uses that for confirmation before he enters a trade. I'm just curious to see if you do that.
Yeah, I don't use that. I know Mauricio uses indicators. Me personally, I don't use indicators at all. That's just me. You know, I mean, everybody trades different. Everybody has their own trading style. And then when it comes to indicators, I don't either way. I don't really know much about a lot of indicators, just because I don't really use indicators. I never got the interest of looking into indicators.
Hey, do
But
you mind
it helps
looking
though,
at
like
AUD?
extra
He doesn't need it.
confirmation.
Wait. So who first? Where's that question?
I'll just follow it up on the question, on the answer that you gave. I said, but it helps though. It's like an extra confirmation.
Yeah, it
to see
helps.
divergence.
You could use that as extra confirmation. I'm not telling you not to use it. I mean, if it works for you, it works for you. You know. I mean, personally, I just don't use indicators. But I mean, if you use it and if it's been working for you, like, go ahead. Like, it's your trading style.
Right.
So, who else had another question?
I was telling you, can you take a look at GPAUD?
Yeah. So I still need to go over another pair before that. So the next pair I was gonna go over with. So no other questions on your AUD, right? So I could go to the next one.
Yeah.
Okay. So next one, so I was saying DJ. You guys should still have the sale limit. If you guys don't have it, here it is. That's the entry price, and this is the TP and stop loss. Okay, you guys are on 10 seconds. No, I don't think GJ will break 136,600. Reason why? Because watch, if we go to the daily, I think it was a 4-hour. Well, if any case, if it does, I mean, we don't have a big stop loss. So my entry point is oh no, yes, yeah, it is gonna break to our sale limit, because our sale limit's at 16. Where is it at? It's 137,090. So that's our entry point. So yeah, I should be breaking that area. So the reason why we had the sale limit here is because as you could see over here, we had what it is, the Wyckoff method, right? So the Wyckoff method happens, the market once it clears the buying climax, it's gonna always tend to keep on pushing up until it finds accumulation of price candle. Which the accumulation of price candle, we have it right over here, which is the last bearish candle before the move down. And another confirmation that we have of that is that we still don't fully fulfill the fair value gap or imbalance or whatever you want to call it, which is right here, right? So we still don't fully fulfill this imbalance area, which market's currently tending to fulfill it as right now. Right? Currently fulfilling that area right now to come and test that accumulation of price candle which is our entry point that we have right there. So that's why we have the sell limit there. So yeah, it should be breaking 136.600 and go to 1.37 100 at the lead. And our stop loss is at 36 pips. We have 3 take profits. The first take profit is right here, right on this equal low that we have, which is at 246 pips. The second take profit is at 307, and the last take profit down here on the equal lows at 505 pips. If you guys don't have those 3 take profit, it should be on the Telegram group. Just scroll up, and it should be right there. So you guys could like place them. So yeah, so that's GJ. The other part I was going to be going over with was going to be UCCHF. On UCCHF, I had mentioned before, I think it was a couple days back that I was talking about this pair. That we were just waiting for price to come down and test the daily accumulation of price candle that we have, right? So we had the so we had the big push up, which is the imbalance here. What's gonna happen once we have imbalance? Market's gonna start retracing down no matter what to like fulfill that imbalance area. Why? Because they react like gaps. So it's just like a gap, right? So market's gonna come down to fulfill that area. And currently right now we see that's testing right here at 50% of the accumulation of price candle on a daily time frame. So now I'm not gonna get in for a buy quite yet, because if we go down to the 4-hour time frame, we could see a lot of liquidity going on in this box area that we have in the 4-hour time frame. So going back to the 4 hours, so that what that means is that most likely right there we have a bunch of stop losses from retail traders who got in for buying positions in the past over here on daily time frames. You know, so they got in for a buy on a daily time frame, so they're more likely to be swing traders. Those retail traders are swing traders. So right here we have all this liquidity left to still be cleared out, which we have the stop loss here, which that right there is an oversold area. This is what I was gonna go back to, which is the RSI. So RSI just like oversold area reacts just like which is the what's called the Wyckoff method. So that's why I don't really use indicators, because everything that I do institutional, it's already like with the Wyckoff method and all that, you know. So it already gives you all the confirmations I need. So every time that we're under 30 or above 70, so the 30 is oversold, above 70 is overbought. Who has that mic on? Can you turn it off? Because it's echoing, please. All right, thank you. Yeah. So so oversold right here. So RSI tells you like oversold, overbought areas, blah blah blah. Me personally, I don't use that. I mean, right here, this distribution phase. You go to a lower time frame, it's the Wyckoff method on the 15-minute or the 1-hour time frame, which we could check that in a little bit. So we have the oversold area. What happens? Researchers get in for a buy. You have the same climax, automatic reaction, second tap, spring right here, going to the upside, and so on. So I don't really use RSIs just because of that. I mean, you could use them as extra confirmations, indicators, and all that, you know. But me personally, I don't use it. Why? Because institutional has already gave me all the information I need, so there's no reason for me to use that. Right, so we have the oversold area on what I use on RSI. So we still need to come down and liquidate the stops that we have here.